Hi everyone, and welcome to Big Data Download, where we make sense of big data and put it to work for your business and your investments. I'm Courtney Regan. Well, today we're looking at the ripple effects of Obamacare and how it actually impacts companies when it comes to hiring. We'll see what the data is telling us. With us now to talk about the outlook of the job market after the Affordable Care Act, otherwise known as Obamacare, takes effect, is Brian Hamilton, chairman of Sageworks. Brian, thanks for joining us. In order to get an inside view of the private labor force, Sageworks did a survey with 300 accountants. So based on the results, what is the likelihood that business owners will hire new employees for the 12 months after Obamacare takes effect?
Right, not totally surprising, Courtney. What we find is that about 70% of business people are less likely to hire under the new regulation. Now, that's a little biased, as you know. You're going to business people and you're going to say, hey, if we increase your costs, they're going to be more likely or less likely to hire. But it is telling, and we've known this all along. My big problem right now is the extension or the delay of the regulation, because it's creating more uncertainty in a market that's already stuck in the muck on the employment side. So that's really what is bothering me.
Yeah, and so exactly to that point, based on your conversation with the business clients, what do companies have planned for hiring over the next 12 months in general?
Yeah, well, not to be depressing today on Monday morning, but really, if you look at our surveys, it's amazingly consistent over the past 4 years. Their sales are up, their profits are up, their margins are good, but they don't have aggregate or net plans to hire more people. There's about 50% of the people who are sort of so-so on hiring. 25% of the people say they might possibly do it. 25% of the people say they're going to de-hire. There's no net positive, hey, we're going to go out and hire people, our business is doing better, and that's what's troubling. And by the way, it dovetails perfectly into why the unemployment rate is getting better, but not super good. You know what I mean?
Yeah, exactly. So when you look at the overall market, since a recession, employment levels still haven't reached those previous highs. We talk a lot about doing more with less. What kind of data does Sageworks have regarding profit per employee? I mean, what does it tell us? Have employers been able to get the same amount of work done with less employees since the recession?
Yeah, it's another great question. And about 40 data points, your big data, right? 40 data points are hitting my mind when you're asking the question, because since the Great Depression, we have not had this situation where over the past 4 years specifically, we've got increased sales, increased profit per employee, better margins, but we've got a lot of people on the fence. It's really true, because the fundamental metrics of private companies are strong, Courtney. Now, we don't know, by the way, how long that's going to last. We've got to remember that we're about 48 months into a strong recovery for private companies, but they're not hiring. But all those metrics that you're mentioning are very strong right now today.
Since we're talking about the labor market and how it has changed over time, business owners seem to be getting the same amount of work done with less people. I mean, have temp and part-time working industry folks, I mean, is that changed in general?
Yeah, well, there's a big surge there. If you're running a temporary placement agency, you're doing terrific. You're growing about 16 to 20% per year. There's a move from high-quality jobs, as you know, you guys have talked about this many times before, to lower quality jobs, or less sort of permanent jobs. But really, if you look at these numbers, you're seeing more efficiency in the businesses. And so typically over the past 150 years, what these companies do is very predictable. They make more money, they get more efficient for a little while, maybe a year or 2 years, but then they reinvest that money back into growth. And that's what they're not doing. And by the way, it's not just on the employment side, it's on the debt side too. At this point in the recovery, we usually see big net gains in borrowing. Businesses want to buy stuff and buy equipment, hire people to run that equipment, and they're just more tentative. And there's possible reasons for that, but if you look at the data on these companies, it's very strong today.
Very interesting trends there in labor and employment. I'm sure we're going to have you back soon. Brian, thanks so much for joining us for Big Data Download. I'm Courtney Regan. Have a great day.